What's up, guys? This video is part of a 4-part series that I'm doing all about e-commerce, accounting, and bookkeeping for your online brands. In this series, I had the pleasure of interviewing a guy named Matt Ramuzzi, who is the owner and CEO of an accounting firm called CAPFORGE. CAPFORGE is specialized in representing brands in the e-commerce space. They have clients ranging from doing, just starting out, not even doing $1,000 a month, to companies that are literally doing over $100 million a year in sales. So you can imagine when you're hitting those types of numbers, or even just working with different types of startups, they have seen every single obstacle, issue, crazy problems that happen inside of these e-commerce brands. So they really know what they're doing when it comes to making sure that your books, whether you sell on Etsy or Amazon or eBay or on Shopify, WooCommerce, whatever it is, that they're done correctly. They recently just took me on as a client, and during this interview, I learned a lot, actually, myself. So in this video, we're gonna be talking about the basics of why it's important to make sure that you're setting up your online store brand entity correctly. So whether it should be an S-Corp, an LLC, a sole proprietorship, all of those things, and why it's important to make sure that you're actually doing this properly when you start your business, and not, realize 4 years later that you've been paying way more money in taxes than you should have, when you could have just set it up properly in the first place. By the way, guys, my name is Hannah Gardner, and if you are new to the channel, we talk about anything and everything that has to do with e-commerce and selling things online, building brands, launching products, everything. Yeah, you get the picture. We are gonna just go right into it and hop into the interview with Matt Ramuzzi. Okay, so our next mistake is when people set up their business entities incorrectly. So you have LLC, you have S-Corps, so proprietorships, etc., etc. What happens when someone sets up their business incorrectly, and what do you guys do to help avoid that or fix those issues when they arise?
Right. Well, it's maybe not fair to say incorrect, but let's say not as efficient as they could, right? So the way a sole proprietorship works, or a single member LLC, either of those cases, right? Whatever profit that business brings in, the entire amount of that profit in the US, right? We're talking about the US, overseas companies can operate a little different, have different metrics, but in the US, a sole prop or a single member LLC function essentially the same. And whatever profits that company brings in, all of those profits are subject to self-employment tax, which is Social Security, Medicare, and any state-related payroll tax. That can add up to about 15% of that amount. And that's in addition to income tax you owe. So let's say you're a sole prop, your Amazon business did pretty well, you made $100,000 of profit. You're going to pay $15,000 into Social Security and Medicare on that $100,000, and you're going to pay income tax on that. Now, if you had switched that over to be an S-Corp, the way an S-Corp works is you pay yourself just like you're a regular employee. Whatever you pay yourself is subject to that same payroll tax, but everything above and beyond what you pay yourself as salary that comes to you as profits from the business are considered distributions, and distributions are not subject to that payroll tax. So let's say same business, same $100,000. As an S-Corp, you pay yourself a salary of $20,000. You pay your 15% on that, which is $3,000. The other $80,000 comes to you as a distribution, not subject to that 15%. So saving you $12,000. Same business, same profits, same everything, except one was an LLC, single member LLC, or a sole prop, and the other was set up as an S-Corp. So just making that change can put 12,000 bucks in your pocket, all else being equal. S-Corps also have the advantage of, if you're paying for your own health insurance, an S-Corp can write off those insurance premiums, a sole prop LLC can't. And there's some other advantages. A sole proprietorship, if you happen to get in a lawsuit, they can go after your personal assets, your personal home, personal bank account, personal cars, personal inheritance, whatever. With an LLC or an S-Corp, you have legal protection. They can only go after the business, but they can't touch your personal assets. So there's pros and cons of different entities, and it also somewhat varies by state. In California, it can be pretty expensive to be an LLC versus an S-Corp. In other states, it's easy to be an LLC and then just use what's called an S-election to make your LLC able to file taxes as if it was an S-Corp, not an LLC. So it's one of those things. It's really hard to give general advice to everyone shouldn't be an S-Corp. There's definitely cases where LLC is advantageous, or you don't qualify to be an S-Corp because maybe it's two partners, one's in the US, one is overseas. So it's one of those things I tell people, if you have questions, just get in touch. I'm happy to look at your situation specifically and give you good advice based on your specific situation. But there's a lot of general info floating around on the internet saying, oh, just be this or just be that, or set up as an LLC, that's fine. And they're not wrong in that you can do it, but they're wrong in that this may not be the most effective or most tax beneficial way of setting yourself up. So it's one of those things, without even knowing it, people go in, get themselves set up as whatever, and then only find out literally years later, oh my gosh, I paid $50,000 more over the last 3 years in taxes than I needed to, and nobody told me.
Right.
So we try to educate our clients about the options, and then obviously they can make the final decision, but usually the decision is pretty easy once you hear the choices.
You guys are based out of California, correct? You can do and like have clients outside of the state of California. So, correct? Like you can.
Yes.
So you
Right.
learning the laws per state in your agency?
Yeah, I mean,
Is that a normal practice?
Yeah,
A lot
well,
of
not
work.
everybody does that.
Yeah, that's
Not everybody
impressive.
does that. But we've got clients in every state at this point. So, we're able to kind of look at it state by state and say, okay, here's what works best for where you're at. And for most people, it's pretty, the information is the same. There's certain places like New York City where S-Corps work great for the federal level, but New York City says, we don't care if you're an S-Corp. we don't let you get out of anything. That's New York City's way of doing it. And in different places, Florida is a very tax friendly state. California is a very tax unfriendly state. So state by state, there are some differences too. And we try to factor that in, obviously, with the advice we're giving you, not just, what's best for you, but what's best for you based on where you're located, to make sure that you're getting the most tax advantageous advice for your specific situation. That's why I say it's, anybody that, like, if you're reading in a forum or, a blog post or whatever, where somebody says, everybody should be this, immediately discard. And anytime somebody says everybody or always, that advice is garbage, because there's nothing that's ever always for all people, all situations, right? There's always variations and specific situations that break the rules that they just told you always apply. So that's why I'm happy to give general advice, and my general advice is just give some thought to what you're doing and setting up, and get some specific consultation so you don't miss out on tax savings or benefits that you might not even be aware of, or that you didn't realize were something that you could do because you read some generic advice somewhere that didn't apply to your specific situation.
Yeah, 100%. All right, guys, if you got any value out of this part of the interview, please do go ahead and like this video, ask any questions in the comment section, and subscribe to the channel. And if you are interested, remember this is a 4-part series. Please go ahead and watch the next part, and I'll see you in the next video.